All right, welcome back, guys. And we are going to be checking now with our account to see what we've done and what we've got from it. Right now, we are showing that first investment that we made with HPR, we're showing that we actually have a return now. We are in the green for it of 24.5 cents. So little gains to begin with. But we have to remind ourselves we didn't start with a whole lot, so we can't expect too much. But we're going to go with that to start. Waiting for Brian to get in with us. Let me see where he's at. I know we're starting a little bit late this morning, but okay. So we were going to talk about gold today because one of the things we've got here on my portfolio, if you can see that red number there at the top for that code JDST has definitely dipped down further. And this, like we mentioned the other day, is related to gold. But we're not panicking. We are not freaking out
Hey,
about this cost going down. Hey, Brian, can you hear me?
yep. Can you hear me?
Yep, I can.
Cool. I jump
So,
in and out because I gotta get ready for a dentist appointment.
a dentist appointment.
Yeah, gonna reschedule it for 10.
All right, well, we are live.
Sweet.
So we've got that going on. I was just talking about the gold thing.
Yeah. Talk about talk about precious metals.
Yeah, we can do some talk about some precious metals because on my portfolio here, we've got that GDST that we were talking about the other day because it was red, not to worry about it. No, don't freak out.
Right.
So right now it went down to $9.40 a share.
Yeah, it's at its low.
Yep, it is at its low, and right now in my portfolio, that's showing me at a negative $846.
Oh man. Yep,
But
they're good.
our HPR that we invested our first $20 in, that is up 25 cents. So what we've done with our first $20, essentially, if we were to sell that right now, we would be at $20.25.
Okay.
So that's how we're growing. And we're doing it just a little bit at a time with that first $20. And that's what I want to focus on is when we start with that little amount, we can make it a bigger amount, just not by leaps and bounds, and we shouldn't expect that at first.
Sure. Especially with penny stocks.
Yeah. So, getting anything back is something to be okay about. You know, you don't get in your head about it. Don't freak out because it's down or um, going in a direction you don't want it to go in. We can just wait. We can wait for it to turn green, and we shouldn't expect too much right now. The more we're able to put in, the more we're going to be able to do later on.
Yeah, exactly. Don't panic.
Yeah, like Hitchhiker's Guide.
Yeah, exactly. So man, I don't know. I mean, you want to talk about so uh, so precious metals. If you hear someone talking about precious metals, they're not really an investment. People will try to sell you metal and they'll go, "Oh, it's a record high," but it the only reason it's going up is because of inflation. Um, they tend to track with inflation because people use them alternatively uh, in case, say, the U.S. dollar shits the bed. So that's why they're okay. You can, but they're not actually. If you notice, if you do the research and track them over a long period of time, they only gain, like 3 to 4% a year or whatever. That's because that's what inflation rate is. And right now they're going up because we're going to see a lot of inflation this year because of coronavirus and everything. So,
Yeah, for the year, it's actually down about 80%, 79.22%. In the last 3 months, though, it is up 123%. And when we're tracking those things, when you look at it, it's only based off of that time frame that you are actually looking at.
yeah, but I mean, historically. So, uh, it can fluctuate. There's only so much gold and silver out there. So, when you're taking that into consideration, you have to understand that you're not really making money off of it. Just because it reaches a high, that doesn't mean you've effectively made any money.
Well, there
Um,
seems to be a lot of misunderstanding right now too over the value of gold and how that relates to the dollar itself. A lot of people seem to still be under the impression that we're under the gold standard, and we're not.
oh, yeah, that's a totally different thing. So, if you think the dollar is backed by gold, you need to do a quick Google search and Google when the U.S. government got off the gold standard.
Yeah, that was sometime in what
Sorry.
the 60s or 70s.
Yeah, basically when the Federal Reserve was established.
So, a lot of people are buying gold because they think that it's still the value of the US dollar in the form of precious metals. And it's not like that anymore, and that's what is kind of fueling a lot of this panic buying of gold. Just like on the JNUG ticker code that we're looking at here right now, we've got 3 million in volume right now. It's actually 2,591,913 in value of volume. So what that means is that is how many times a transaction has occurred with this particular stalker code. And when you see those numbers going up and down, that's not necessarily a good thing or a bad thing. That is actually a lesson that I learned myself a few months ago that kind of put me in a bad position because I was looking at that volume number right there, and that did hurt me because I was looking at that value without looking at the other information that I should have been looking at, and I ended up with some losses because of it.
Yeah, exactly.
Because you have to remember that those transactions aren't just people buying, that's buying and selling at the same time.
Yeah, that's the thing. I mean, you gotta, unless you're trying to build out a portfolio or use a model, or you're buying like an ETF or mutual funds, which we can talk about at some point. You're just you have to really do your research, and you have to understand all of the fundamentals that go into investing. You have to understand what all the terms are, and you have to look into those specific stocks. So it ends up taking up a lot more research time than most people think.
Yep, and this really kind of turned into a full-time thing for me when I first started with all the research that I had to do in between my buying and selling.
Right. So, you want to know something funny about gold since we were talking about it, or
Uh,
ironically?
sure.
So, so the reason it went down over coronavirus is really funny. So, people buy it because they're hedging against, like a US dollar collapse or hyperinflation, something where you're really worried about not having money, like paper dollars. But when the market crashed, people were selling all their gold and silver too. Like
Yeah,
they
they're
were
trying to
just trying.
secure their profits on it.
Right, but the whole point of having that is the exact opposite reason. The whole point of having gold and silver is in case something like this happens where the market crashes, you're losing a ton of money, you need to have money in something that isn't dollars. So, like, say it got even worse, right? People were because like a perfect example is back in the Great Depression, the early 1900s. There, I mean, we didn't have the reserve back then, so it was still in the gold standard, but there were runs on banks, um, and so there was no money, so people literally they couldn't do anything. So having gold and silver is fine, um, because if people go to the bank or like say you reach hyperinflation and the dollar is worth nothing because the government keeps printing money to make up for the failing economy, like what happened in countries like Germany after World War One, etc. So the whole point of my the short story is you hold on to gold and silver in case you're worried about not being able to use regular money. But the funny thing is they sold it. Yeah, because like you said earlier, most people think that it's an investment. So they're like, oh, I need to get out of this. And they're panic selling.
Well, it's still an investment, but
So,
they're investing the wrong way.
well, it's more of a hedge than
Now,
an investment.
a lot of this
So
too isn't
again,
fueled by individual users either. They are fueled by larger financial institutions because a regular person typically isn't going to be buying this type of a stock in large volumes. This is the kind of stuff that's bought by institutions at higher volumes.
correct. But let me ask you a question.
Okay.
If if I offered you an investment, right?
Okay.
Let me back up. If inflation is about 3-4% a year, which inflation is essentially um, inflating the value of the dollar, and the end result is your dollar is worth less. Things cost more. Um, so in order to beat inflation each year, you need to make more than about 3 or 4% return on any investments you have. If you really want to make money, quote unquote, at the end of the day, you need to make more than that. So if I said, "Hey, I want to sell you gold," it makes about 3% a year. Would you consider that a good investment?
Mm, for the long term, yes. For the short term, maybe not.
Why? It's only making 3%. So I just told you you have to beat 3 or 4% a year to effectively make money on your investments to make a return.
Yeah.
And you're only making 3% because gold tracks with inflation. So that's not a good investment because you're not actually making money. So when you say investment, I don't consider it investment. I consider it like a hedge because when you're hedging, you're essentially buying it to bet against something. You're buying it as like an insurance plan, a policy. You're saying, okay, well, in case this thing happens over here, I'm going to have this, so I'm not fucked, basically. So, or
Yeesh.
like if you go to the casino and you say, well, I'm betting on black so I don't lose all my money on red. It's that exact same thing. More than an investment. An investment is something you want to make money off of. Ideally, you want to make a return on your investment. You want interest, you want to get paid dividends, you want something. So,
Yeah. So if we
so that's
check
why.
with Investopia on hedging, a hedge is an investment to reduce the risk of adverse price movements in an asset. Normally, a hedge consists of taking an offsetting
Right.
position in a related security. So we're actually talking about both of those particular types of ticker codes that we were looking at here together. We're looking at JNUG and JDST at the same time because one is offset
Right.
by the other.
So buying right. So buying gold and silver in general is hedging against the negative or the adverse effect of the dollar.
Yeah, well,
So if you're buying currencies,
let's look a little bit deeper into this though. As far as understanding a hedge, hedging is analogous to taking out an insurance policy, just like you said. If you own a home in a flood-prone area, you will want to protect that asset from the risk of flooding to hedge it. In other words, by taking out flood insurance. In this example, you cannot prevent a flood, but you can work ahead of time to mitigate the dangers of and when a flood occurs. This is a risk-reward trade-off inherent in hedging. While it reduces potential risk, it also chips away at potential gains. Put simply, hedging isn't free. And this again comes from Investopia, which is a great resource in learning what a lot of the terminology means when you're talking about
oh, for
investing.
sure.
Yep, and this comes directly from them. This they use the example of getting
Yeah.
flood insurance here as you've got to pay for that premium for that insurance in the event something happens. You've got to have that set aside, which is really what we have done by taking that particular stock in that JDST. Is I have hedged my account to bet against the value of gold. And right now, we're seeing that in a negative downward trend because the price of gold is going up. So I put my money there and it's going in the opposite direction. But that's the security on my account. And we're likely going to see that moving in the opposite direction even more when the market opens here in just several minutes. And I expect that. So my overall account, yeah, it's going down. Moving further and further away from my short-term goal because of this. Let me see. So it goes on to say here, the in the investment world, hedging works in the same way. Investors and money managers use hedging practices to reduce and control their exposure to risk. In order to appropriately hedge in the investment world, one must use various instruments in a strategic fashion to offset the risk of adverse price movements in the market. The best way to do this is to make another investment in a targeted and controlled way. Of course, the parallels with the insurance example are limited. In the case of flood insurance, a policyholder would be completely compensated for their losses, perhaps less a deductible. In the investment space, hedging is both more complex and an imperfect science. So I think what they're hinting at here is more like diversity. So having more diversity in your portfolio helps to protect your account from having effects that would be unwanted, like a increased losses versus gains by having more assets that you have more control over in your portfolio. You don't want to have everything invested into one little thing. You don't want to have everything invested into two little things. Um, Again, my account is not a shining example of that right now just because I needed to make some preparations to make this as easy to understand as possible for anybody who may be viewing.
Well, well, absolutely, but hedging is a specific strategy. So if you want to have a diverse portfolio of different things, uh, so yeah, one offsets the other. But if you're specifically hedging against something like the JDST example, yeah, you're hedging against the gold industry. But also what you could do is buy the inverse ETF of that the JNUG
Yep,
or whatever that one is.
yep,
You could buy
JNUG.
that to hedge against. Yeah, you could buy that to hedge against um your JDST because you would expect that as JDST goes down, JNUG will go up. So that's more specifically hedging than just having a diverse portfolio of different investments
Yes, exactly.
to
And
offset your losses with one area.
and I actually have a list here inside of my list of things that I put together just to be able to look at that particular effect. And inside of this list, I've got three different types of ETFs along with their counterparts, if you could call it that. One of them is based on oil, another one is based on gold, and another one is based off of the S&P 500. So I'm able to look at those side by side in tandem and take a look at that mirrored effect that they have on one another. And the lower one goes, the higher the other one goes. You want to get something that's on the lower side and wait for it to go up. And that's when you would sell. You want to buy it low, sell it high. That's the general rule whenever you're talking about what we're doing right now, which is really called swing trading. But right now, we're moving in the downward side. But again, we expect that. Now, our initial $20, we are currently down 15 cents. Market's going to open here in a couple of minutes, and we're probably going to see a bigger change than that. And again, we're just looking, seeing, watching, and we're taking a look at what those consequences are for the choices that we made. And we also need to make a decision on what we feel comfortable moving at on that initial investment that we took out on HPR. So, what would be a good exit point?
What was that?
What would be a good exit point on this HPR that we took?
What was your average price?
The average price that we have on HPR was 39.5 cents per share.
Now, what's it at now?
Right now it's at 39.2. So we are actually showing a loss of 15 cents now, where we were showing a gain of 25 cents because that's just how fast it can move.
Right. Well, I mean, I would say hold so you can actually make money. But
Yep,
if
but
you're trying to get out of it today so you can place more trades, then
and that's the question. I mean,
39 and a half.
well, 39.5 is where we started.
Oh, I'm sorry. Then 40 cents.
40. Okay, so that would put us at that 25-cent gain. And there it is right there. Okay. And we're going to choose those extended hours.
John, do you want to bring in a guest to fill my time?
Sure. All right. Okay, so we ended up selling that at that 40 point, and that put us at a gain of 25 cents. So right now we are up on our first $20 at $20.25.
Hey, did you hear me?
Yes, I did. We have a guest, right?
Yeah, I can have.
Well, we did have a guest. So, do we have a guest? Do we not have a guest?
Hey, sorry, my phone was fucking up. I didn't connect back to Discord. Um, yeah, well, I was gonna bring him on a little later, so that way he can fill some of the time I'm gone.
Okay. So we sold that at 40. We only spent $19.75. So that plus the 25 cents that we had in hold leaves us at $20.25 that we have now. So what could we look at to put that into now? Is the question that we've got. Um, where could we possibly put that $20.25 now?
Okay, so you executed it and it sold for the game?
Yep.
Okay, well, that was a fast swing. Um,
That's about how fast I execute them. I'm actually always looking for things that I can execute within a few days time frame.
okay. What's on your list right now?
Right now,
That you
we've
can
got we've got a few things on the list here. We've got CBL and Associates properties. We've got Panasonic. We've got Pacific Coast Oil Trust, which seems to be on a downtrend right now, but they've got some pretty low volume as well. But this is going to be based in the petroleum sector, so we've got to think about what direction oil is going in for that. Um, so now would be a good time to start doing some research. Where do we want to go with this? So what type of things do we want to research here? And how are we going to do that research? We are going to do this in a way that I used to do it, and we're going to do this by a sector here. And HPR was petroleum based. That was something that was based on actual oil. So now let us look at a different market. Ordinarily, you want to look at things that you're familiar with. We want to look at things that are familiar to us, things that we are well versed in. But with the way the market is right now, you don't necessarily have to do that as long as you're able to research properly. But at first, we really didn't know what we were doing. We still don't know what we're doing. I don't know what I'm doing, but I know what I've done.
So I can tell you, I had some stock in a medical research or medical tech company at the beginning of coronavirus. It actually had nothing to do with coronavirus, but typically in a recession, you're going to see medical go up, or in general healthcare, because people still need to go to the hospital and stuff, even in a recession. However, right now the government is subsidizing different companies with millions of dollars. That's, for example, why Kodak shot up, because they're getting into coronavirus research.
The key in that is actually trying to find them before they get that particular type of investment or loan or additional boost in funds. You're trying to find those guys before the news hits, and then watching that news. So how are we going to find that?
Well, you could look at a handful of them and pick one, or invest in 4 or 5 of them if they're cheap enough. There's some that after the news they spike, but then they drop again because people realize.
That's been a lot of them. That's kind of been the volatility of the market here lately. So that's really what's been happening. We've got an instance of a lot of companies that are getting good news, and what they're doing in that good news is they are spiking because of that notoriety, and then that's an overreaction, and then a correction comes in where the overreaction falls off, and that's what we're really looking at. We're trying to get in on that overreaction and then getting out before that correction happens.
Exactly, yeah.
And that's what's happening with gold right now, and that's why we're waiting for that dollar value on that JDST to go back up, because we're not worried about it, because that's based off of an overreaction, and we're waiting for that correction. When I was looking at this yesterday, and we were within, $200 of breaking even, and now we're looking at being under $916 is what it's showing now. That is the result of an overreaction.
Do you want to pull? Actually, yeah, I might buy some out as well. Do you want to pull up some articles or Google how much money in the last several months the government has subsidized or has thrown at companies to do research on coronavirus vaccines?
Let's see. Government funding of COVID-19. And there's a lot of information on this.
Yeah. So while John's doing that, I'll say, if you're looking for information on a company and you're looking at purely financial information just to see, because we're looking at short-term stuff, but you may want to look long-term. You may want to look at the dividend payout. which is dividends are like, think of it as interest payments. Like, you're giving the company money, and in return, they agree to pay you a little bit of money back for that. So there's also corporate bonds. So in that sense, you can go to a company's website, they're publicly traded, and by law, they have to post their financial reports. Now, you're going to have to learn a little bit about how to read a financial report, but there are some quick ratios that you can learn. Like earnings per share is a big one when they release their financials. There's a quick let me think. Probably Investopedia is a good resource for that as well. So find a quick guide on that, and you can start looking at either their 10K report, which is their annual report, or you can look at their quarterly filings to the SEC, and then you can start determining how well that company is actually doing, not just pure speculation, which is what most people are doing in the market. So that's one way to research a company. Another way is what John is talking about, where you kind of put a watch list together, or for example, Robinhood and Webull, they'll give you either like top 10, top 100. You can form your own list. If you click on something at the bottom, they'll give you a little list of either recently viewed based on what you've viewed, or additional companies in the same sector. So what you want to do is you want to look at those,
That's
and
that's
you
a
want
little
to
dangerous
determine.
though. When you're talking about those types of things, what they're doing is they're basing it off of trends, and that can be a little dangerous. That is actually how Hertz got such a huge investment capital pumped into their stocks when they were going down and bankrupt. And that was really thanks to Robinhood users, and that had a lot to do with that trending type of investment with, hey, other people that bought this other stock.
Well,
They were looking at that percentage gain in Hertz, even though they were going bankrupt, and pumping a lot of money into that company without understanding, hey, I could probably lose all my money here.
right. Well, hold on. You gotta let me finish. So you can find companies that way, but that's step zero. Step one is to look into either the company's financial records to see what they're doing. You want to look at the company and see what kind of other investments they're getting. So Hertz is a bad example because it's just a bunch of people buying their stock and volume trading. You want to look at, are they getting investments from private investors? Um, are they or you look at a company, are they scheduled to do an IPO, which is initial um, offering? Sorry, I'm tired. Initial stock offering, basically. So you want to look at what people who are in the industry or who are investing large sums of money, what they're investing in. That's usually a good indication whether or not they think the company will perform. But
Okay.
that's what I do. So
So it's really hard to kind of pinpoint the amount that's been given to date. It looks like Health and Human Services is looking at distributing another $10 billion in additional funding for COVID-19 research and development. Um, as of March 27th, it was $415 million, and that was related to the Defense Health Program. Um, so there are a lot of different aspects to the amount of money that's being given out by the federal government for COVID research, but the names of specific companies don't really come out until after the fact. A lot of that has to do with insider trading and things like that, and this is just to prevent a lot of mayhem happening in the market. Um, because that is definitely a surefire way to influence the market in a way that would definitely be illegal. Um, so a lot of these things
well,
are
you could
not
also
announced until the last minute.
sure you could also look up companies that have had huge what was the PPP loan from the government? because if they're getting millions of dollars of loan money, that list is public. So if it looks like they're doing well all of a sudden during coronavirus, it's
Well, that
because the
was
government's like,
that's not necessarily the company doing well. That PPE loan really had a lot more to do with protecting the employees from having to go for long periods of time without money. So that was more or less kind of just a lifeline. It really doesn't have too much of an effect from what I've seen on the overall company or industry. That also depended on which companies applied for it, which ones were approved for it, and at first that was a lot of larger companies that were putting in multiple applications, and that prevented a lot of the smaller companies from being able to take advantage of those particular loans because they were depleted by the time their applications were submitted.
right. Well, but you can look up that the list is public,
Yes,
so
but
you can look it up.
let's take a look here at what we've got. Um, okay. All right. So with HPR, we just got out of HPR, but we could have stayed there. It looks like they actually went up a little bit from the time that we exited to 41 cents and 61 tenths of a penny a share. So that could have looked a lot better. But as long as we got out of it and we were positive, we should be okay with that. We don't want to look
Yep.
at something later on and go, well, we could have held on and gotten more. If you get too greedy, you're setting yourself up for failure. Okay, so we have $20.25. And we may hold off so we can do some additional research before we start putting that into another thing, unless we find something that we feel really good about. How are we going to look at that, though? Let's see. Okay.
John,
Yep.
did you check chat? I can't see chat. So
Oh, do we have chat going on?
yeah, I think we have chat questions.
Oh, wow. Let's see. How do I check chat?
Uh,
Oh, here we go. So those were from Matt. He asked, how do I find a company's financial report? Are they all in one place on the market somewhere, or do I have to track down each company individually? So if I were to look in certain things, I would find that information. In Robinhood, that information isn't necessarily readily available. Those are the kinds of things that you have to research on your own, and that's part of doing your due diligence and making sure that you are researching the information appropriately. So let us look at, as an example, Um, let's look at United Microelectronics. That's ticker code UMC. So Yahoo Financial is definitely a great place to start. Finance.yahoo.com. So if I were to go there and look up this code for UMC, well, that brought me to something different. Okay, that's not what I'm looking for. You're giving me Noravax, and I'm looking for United Microelectronics. That or I just don't know how Yahoo Finance works.
We're all learning. We're all learning together.
Let me just do a search for United Microelectronics. Okay. There it is. And this is under Yahoo Finance. So we have information that we can look at as far as the analysis, their financials, their profile. So let's look at their profile first. So under their profile, we're going to be able to see where they're located, what the description of their company is, and this company acts and operates as a semiconductor wafer foundry in Taiwan. So they're in the electronics industry, microelectronics industry. It's kind of hinted on by their name. So technology is definitely a great place for investments. If we go to their financials, this is where we can actually see their revenue. So as of December 31st, 2019, they were at 148,201,641. And then you can also see their operational costs and their gross profit. Their gross profit from that minus their actual cost of revenue comes to $21 million. So they do pretty well overall. And this is where you're starting to look at their actual financials and doing that research to see how stable they are. You know, are they at risk of going bankrupt? No, it doesn't look like they are. Now, let's take a look at sustainability. Let's see, sustainability, come on. And right now their shares are trading at $4.27 per share, which is up 11 cents from when the market opened.
So it could keep going. Or it could drop.
It could. It can go in either direction. So they don't have a whole lot here under sustainability, though. Let me see. Another thing that I've started to look at was the inside trading. Marketbeat.com is where I've been going through that kind of information. Get rid of these ads. And you can actually take a look at their analysis, their advanced chart, competitors, their dividends, earnings, financials, the institutional ownership, headlines, options chain, all of the other information, even their social media at this particular area. And we're going to go to their institutional ownership. And right now, in Q3, internally within the company, 1.61 million shares have been purchased from inside of United Microelectronics by their own employees. And 191,000 shares have been sold currently in the third quarter.
Okay. So I'm trying to get the guess situated.
The guess?
Yeah.
And these reporting dates were as of today, or as of yesterday, I'm sorry. It also looks like they have been purchased by hedge funds. So this is a good place to take a look and see whether or not this would be a good investment. Now, in the second quarter, there were 22 million shares bought internally.
Hello. Can I grab one?
Yeah. Scrub it off the top like a tissue.
What is that?
I have to sign in.
Oh, I'll have to wait for you to put your mask on.
Oh.
Oh, are you at the dentist's?
Yeah. Let me mute myself. I'm sorry.
Oh, looks like Brian has gone to the dentist. All right, so these are some ways that we can research a potential stock by taking a look at these particular aspects. Because this is useful information to know. If they're buying their own stocks, that's a good sign. If they're selling a lot of their own stocks, that's generally a sign that it's about to go downward. And there are some places that we can view this information inside of our tools versus otherwise. In Webull, if I look up the same company here, and this is one of the reasons I like Webull, if I go over to press releases, they're going to show me their dividends. And it's also going to show me information like the forms that are submitted to the SEC. Like right here, the latest one that they have in the 29th of July is their 6K. And if I pull that up, this is Form 6K with the SEC, the Securities and Exchange Commission. This is a report of a foreign issuer pursuant to Rule 13A-16 or 15D-16. I don't know what any of that means. But this is information that
Alright,
is
so
released and sent to the public. Go ahead.
I'm waiting for Avery to jump in the live room. I set him up as a guest, but I gotta go into my stupid dentist appointment. So
Okay.
I will, if he shows up. If he doesn't, then boo. We don't have a guest.
All right.
But he's getting his laptop set up.
Okay.
So, and his mic set up. So, but I will see you tomorrow
Yes, sir.
and the people at home. All right.
All right. Have
Bye.
fun.
Thanks.
All right. So this Form 6K, let's go through this and see what they've got to say. So
Test. Hello.
hey, Avery, thanks for joining.
Hi there. Thank you. Thanks for having me.
So we're going over
I
right
had a little
now.
issue with getting the live stream from YouTube synced up with the real-time audio. It seems like there's a bit of a 10 or 15 second delay or so.
Yeah.
So forgive me if my screen is a little behind as to what I comment on here. But yeah, it's great to be here.
Yeah, not a problem. And there is a bit of a delay there. At least you're able to see it, though. That's a relief. So right now we are looking up some information on United Microelectronics, ticker code UMC, because they are at a pretty good cost right now. It's under $5 a share, and it looks like their stock has actually been going up today, and we're going to take a look and see why that is. The financial information, a question that we had on actually being able to find financial reports, you can actually find those in certain areas of certain applications or platforms. Webull does have that information readily available. Otherwise, you would have to kind of hunt for it on your own. And kind of resources that I've been using for that are marketbeat.com or finance.yahoo.com. And that will have a lot of that information broken down and available. What we were looking at just a moment ago was the internal buying and selling of shares within the company itself. And what we found was that in the third quarter so far, they are over 1.5 million bought internally and just under 2,000 sold. Which means they're buying more of their own stock within the company.
Mm-hmm.
And that's a good indication. That could actually be an indicator as to why their stock is going up this morning. And the financials tab in Webull is what I've got up right now on the mobile, which is showing us their earnings. Now, their quarter 2 earnings was released just not long ago, and that will definitely influence the prices of their shares and the buying and the selling of their shares. So today they do have a lot more inflow than they have outflow. So there's a lot more buying than selling occurring right now, and that will drive the price up. And this is also a dividend-paying stock, it appears. And
yeah, you started to get into some dividend stuff and the advantages and whatnot earlier in the stream, but could you touch a little bit more on, like, what's the plan with dividend stocks? Like, when should I go for those? When should I not go for those? Should I only ever invest in dividend stocks?
That's going to be dependent on the user. For myself, like I said, a lot of this is going to be, just what I'm doing on my own for my own portfolio, but everybody's going to have a different feel of what they want to do. As far as dividends go, it's great to have that passive income to rely on, especially if you know that they have been reliably paying out those dividends over a certain period of time. That's what a lot of the blue chip type of stocks are. They're safe investments that have a pretty safe payout ratio of their dividends, because that's definitely something that keeps an investor wanting to keep their money in one place. So for myself, that's eventually where I want to be, is having a lot more money inside of dividends, and then having a lot of that dividend payment coming to me as a form of passive income. So my money will work for me at that point. But for each individual user, it's going to depend. It depends on what kind of style that they kind of develop as far as their strategy. Right now, I have been more geared towards the swing trading, so I'm not going to get a lot of dividend payout when I'm going into something and coming out of it really quick. You have to hold that stock for a certain period of time before you're entitled to those dividends. Now, with that being said, there are a number of stocks that are available with dividends, or at least show dividends. And we do have to be careful about that, because sometimes they look just too good to be true. I mean, if somebody is saying that they're paying out a dividend of like 20%, then what's the catch? It could actually be something that is borderline illegal activity. That could actually be what's called a pump and dump, where somebody is trying to entice people to buy into this particular stock because of these high dividends, and then wait for the price to draw up, and then they sell off their majority of stocks, and that will in turn cause the stock to plummet, and that gives them an excuse to not pay out the dividend. Does that make sense?
So there's a chance that they won't pay out a dividend. You said that some companies like blue chips are pretty reliable in paying out their dividends. What other things could cause a company to not pay out a dividend? And is that legal? Is that fair? Is it something that, what do we watch out for?
There's actually no laws that prevent them from withholding a dividend. For example, Ford. I had stocks in Ford, and they chose to stop paying out their dividend because of the pandemic situation right now and their loss of profits. So, with that being the case, it's a temporary hold that they put on their dividends, and I stopped receiving them. But that also cost Ford a number of shareholders. A lot of people pulled out because that dividend incentive was no longer there. Um, there's nothing that tells a company that they have to pay a dividend, though, with the exception of what's called a REIT, an REIT. Those types of stocks are required to pay out dividends of 90% of their profits. So there's going to be a higher margin there for the REITs, but there's also a higher risk associated with them, and they don't pay out nearly as frequently.
So let's get back to United Microelectronics. Where did we get with that? Thanks again for sharing the resources there. MarketBeat, Investopedia, Yahoo Finance. We should probably put those in the description of the video here. But
yeah, I just didn't have a whole lot of time to put in the description information, and I'll probably.
Well, you could do it after the fact.
Yeah. So, with the United Electronics or Microelectronics here, their dividend payout, the last time that they paid their dividend was on the 14th of July, and the dividend was at 0.098 cents per share, so 9 pennies and 8 tenths of a penny per share. So if I had 10 shares of that, then I would have gotten 98 cents. That's not a bad payout for a dividend, especially for something that's a penny stock, something that's under $5. And it looks like dividends for them are being paid out annually. They're not paying them out quarterly. So it's once a year that dividend is going out. And I'm looking at that right now here in Webull. It does give me a kind of a tracker on dividends. Last year, their dividend payout was for 6 cents and 5 tenths. And the year before that, in 2018, their dividend payout was 8 cents and 2 tenths. So they do it annually. So once a year.
So I was in and out of the stream already. Did I miss the point at which we purchase a stock? Do we have any money to play with today, or
We do because we just sold our initial purchase, which we spent $19.75 on shares from HPR or High Point Resources for a 25-cent gain, and we
Mhm.
sold it at 40 cents a share. So right now we have $20.25 from where we started on Monday with $20.
Okay, so let's research the stock we're going to buy. Are we gonna buy United Microelectronics? You said dividends is more of a long-term investment. So are we doing the short buying and selling or the long game here?
We're doing the short. We're doing what's called swing trading. That's what I'm doing right now. Is I'm swing trading. So right now I'm looking
Now
at
that's not day trading,
No, that
right?
is not day trading. Day trading is when you buy and sell the same type of stock on the same calendar day. If you do it on separate days, it's not a day trade. It is a
Okay.
swing trade.
And
So,
we want to avoid day trading because it has extra restrictions and stuff like that, right?
well, yeah, there are penalties that can be imposed if you don't have a certain level of security in your account. So, if you have less than $25,000 of liquidity or equity in your account, then you will be penalized for day trades or pattern day trades. Um,
Hmm.
I imagine that that's because of the volatility and the amount of risk that is inherent to day trading.
And the effects that too many of those kinds of traders could have on the market, perhaps
Yep.
potential for abuse, maybe, who knows? So
Yeah.
we're going to focus on swing trading, which means that it has to at least be predictable or reliable enough looking to last us through the day and into the next.
Well, we're not even looking at being lasting through the day. When we're looking at swing trading as a particular strategy, we're trying to find it at the lowest point. We shouldn't be worried about it being in the red because we want it to be low when we buy it. We want to get it at the best value for ourselves. And then we want it to increase. Usually it's going to be fueled by some form of news or some media or some public information or PR that's released that's positive for them that drives their stock upward. Um, like the United Macroelectronics, they're on the uptrend today, and that very well could be because of their earnings report. Um, so that's what we're really looking at when we're trying to make a decision for a swing trade. So we did do a sell today. We don't have to feel pressured to make a buy today, though. That's the other thing. When we've got a lot of things that are going on in the market, and today there are a lot of things that are happening in the market, so it does look a little more complex because there are a lot of things that are on the uptrend. S&P 500 is going up, the Dow's going up, Nasdaq's going up. A lot of things are going up today, which is a little surprising given the state of affairs currently in the United States, with our markets going upward and not a lot of capital being available on the spectrum. Remember, unemployment didn't get extended as of yet. So a lot of people are actually missing a lot of money this week. So we may actually be looking at some things going downward versus upward. And that is also one of those things that me and Brian were talking about earlier, with one of the things in my portfolio showing this negative $960 right now under JDST. Because there does seem to be a significant amount of panic buying of gold right now, and everybody trying to drive that price up to these record highs. But historically, when that happens, it drops down significantly fast.
Hmm.
Because after these overreactions tend to come these corrections, and those corrections are going to bring that price back down.
So
And
I'm still trying to get into my Robinhood app. Sorry, forgive me for being
that's
a little
okay.
quiet here. But let's say I'd like to make a purchase today. Uh, if you were starting from the beginning, as in you didn't, like, let's say that you're coming back from a hiatus or whatever, and you wanted to go in from ground zero here, what would you do to sort of look for some of the best potential candidate stocks, given no prior research on anything yet?
Well,
You mentioned something about rankings or one of the apps being able to show you the highest and the lowest in certain categories.
That was in Webull. That actually gave me the highest gainers for the day, the most losers for the day, the ones that lost the most, the ones that gained the most.
Is that a
Um,
good place to start?
that is a kind of misleading. When you're looking at something that's gaining, then you've kind of missed the boat. You want to get into it before it starts that gain. Um, so you could look at the losers and take a look and see why they lost. That might
Mm-hmm.
be a good place to start. And for Robinhood, what I was doing at first in Robinhood, and again, for anybody watching, none of this is financial advice. This is not a recommendation of how you should look for stocks or an indication of what stocks to purchase. This is just how I approach my portfolio and make my decisions in purchasing things for my portfolio specifically. So, just to get that out there, if I go to the search tab inside of Robinhood and I look at the popular lists that they have at the very top,
Mm-hmm.
there is a category here for healthcare supplies. If I tap on the healthcare supplies, I've got this list that has all of these companies that are doing healthcare supplies and what they cost right now. I can go over to the filter and I can sort by the price. And if I put that price to the arrow going upward, it's going to give me a low to high filter. And I can take a look and see what the lowest cost stocks are. And this is going to bring up the penny stocks at the very lowest cost currently. Not all of them are available for purchase through Robinhood. They're just going to let you look at some of them. Others you can actually purchase.
So you can't buy all the stocks in the market with a single app or exchange?
Not all platforms are going to have all of the stocks that are available for purchase. No. Some of the stocks are what's called OTC or over the counter stocks. Those are going to be more higher risk and they may restrict access to certain types of stocks like that. Other ones are going to be too volatile or they're going to be in different categories like warrants. Those are going to be restricted. So it depends on what platforms you're using, and that's why we recommend having more than one platform because you do have access to other things in some platforms versus others, and you also have that ability to access a portfolio in the event that one of those platforms goes down. So if I'm looking at these particular stocks that are listed in front of me right now, if I look at RA Medical, for example, and it doesn't do me any good if their information doesn't come up, though. There we go. So they are on a downtrend, but they have a healthy volume. And this is what I have learned about volume. You want to have a healthy volume because that means it is actively traded among investors. And if the volume is really, really low, like say in the hundreds or just the thousands, that means that there is
Mm-hmm.
not a lot of activity for trades on that particular type of stock or on that investment. That means that you might be able to buy it, but it makes it a lot harder to sell it. Because when you're putting in a stock for sell, or if you're trying to set a selling limit for whatever it is that you have, then somebody has to want it in order for that sale to go through. Somebody has to buy it in order for your sale to happen. Because you're holding the stock and you're the one trying to sell it, and somebody else has to want it. So you do want to look at volume and make sure that it's got a good amount there. Today's high on this particular stock was 30 cents, and the low was 29 and 22 hundredths of a penny.
Okay. I
Right.
got into my Robinhood app finally.
Okay.
And I think my free stock was also Ford, actually. Uh, so let's see where, if I wanted to buy something, or if I'm sorry, if I wanted to get to the place where you're at, I wasn't paying close enough attention here.
So if you go to the search tab, it's the magnifying glass icon in the middle bottom there.
Got it.
That's going to bring up a search bar so you can look up ticker codes.
You're doing RA Medical, huh?
Well, that's what I'm looking at right now.
Yeah, I'm just trying to join along is all. Follow along here.
Sure, absolutely.
Okay, carry on.
And looking at this, there seems to be a downtrend on it, but it's not a very high cost stock. Now, they haven't released their earnings as of yet, though. Their earnings report is actually coming out on the 11th of August, so just in a few days.
Mm-hmm.
They do have a high volatility, though.
Yeah, I'm looking at their trends over 1 week, 1 month, 3 months, 1 year. It's pretty grim for them. I mean, as a company, for an investor, it might be an amazing opportunity. But what would I look for? What kinds of things, being a medical company, should I look for maybe that would indicate that this company is ever going to pull out of this nosedive they've been in for quite some time?
Well, they really aren't in a nosedive kind of the way that one might imagine, because they are showing signs of uptrends within the pandemic space, to try and like quantify it that way.
Well, if you look at the
Because
3-month trend, for example,
yep, and in the 3-month trend currently, we're showing that they did have an uptrend in May. But if we look at their 1 year,
well, May's outside of the 3-month window, isn't it?
no, May is currently inside of the 3-month window. But the time frame that I started looking at initially was the March time frame.
Right. March was when all the rules changed.
Oh, that's when the world changed. And if I take a look at their 1 year trend and look at February, that's when they started their really big downtrend, up to March 5th. That was when we saw that really big dip in the market everywhere else, but they kind of maintained a certain level at that point in time. So if I'm looking at their 1 year, historically, they've been over $1.
So I'm going
And
to just go to the interwebs and just do a search for the company, go to their homepage and start there for research. What kinds of things are they announcing? Do they have anything on the horizon coming out? And after that, I'm going to take it to one of the other sources you mentioned, I suppose, and maybe find something on Financial Yahoo that indicates any more insight. So they've got a link on their homepage called Latest News, Breaking Stories from Our Newsroom. Obviously, anything that they put out themselves, I'm going to expect to be tinged with bias.
okay,
Let's
and
see here.
they recently put out what's called an 8K with the SEC.
An 8K? What's that?
Form 8K is a report. Let's see what this is entailing.
Form 8K is a very broad form used to notify investors in United States public companies of specified events that may be important to shareholders or the United States SEC. This is one of the most common types of forms filed with the SEC. Okay, so that should be useful then.
All right, and this is actually in reference to a public offering. So what this means is they are actually putting more shares out into the market, and that has been the thing that has caused their stock to go down in value. And that was just on the 3rd of August, so that was just 2 days ago. So this really big downtrend of the cost in their stock was actually a result of this putting out of stocks into the market in addition to what was already there, because what they did is they actually put 31,188,100 units out into the market that were not originally there.
that something that I mean, I really don't know what to do with that information. Is
So,
that something that I should want to be part of, or what do you think? Is it something that I need to
well,
weigh against specific criteria?
when they released this initial form, what this was is it was a kind of a notice to current stockholders, hey, we're going to put out these additional shares, and that's going to cause the price of this share to go down. But this is to let you know if you wanted to sell your shares right now, then this is the time to do it. So this usually happens and causes a sell-off to occur that drives the price down, and then people will buy back in at the lower price in order for it to go back up. So with this happening before earnings, this could potentially be seen as a move by the company to make their stock more affordable for people to buy into, because they have good news to share during their earnings. Do we want to take that risk? So, you know
I don't
what?
know. It seems like companies have plenty of ways of making earnings look better than they are. As unscrupulous as it may be in certain ways, there are ways of padding your earnings statements and whatnot. And what company in their right mind would release an IPO if in a moment when they're not looking profitable?
Well,
So
an
I don't know the
IPO is
answer to that question.
IPO is different from a different public offering. An IPO would be the first time they're entering into the stock market.
Oh, so this isn't an initial public offering, but it is a public offering,
It is a
an
public offering,
upsized
but not an
public
initial.
offering,
Yeah. So this means that they've been in the market for a while. They've been in the market ever since 2018.
which
So
is why they
they're
have a ticker symbol.
Yep. So they're still relatively new, still relatively young, because in 2018 they were an initial public offering. They are a California-based healthcare supply company. So, based off of that information, I think that this might actually be something to put a little bit into. So if I were to
Well,
buy on
forgive me for
this,
being the skeptic, but I want to know, from them as a company, what do they have going on? Like, I don't know anything about RA Medical other than a few numbers still. Um, they, I'm looking at their press release thing here that lists their second quarter financial results. I linked it in the Discord if you wanted to check it out yourself. But it's just a quick summary of all of their things that would have gone into their 8Ks essentially. They announced the closing of a $12 million upsized public offering. They announced the pricing of it. They announced the closing of another one, really. So they had another public offering in May, and now they're having one in July, August.
uh-huh.
So this isn't even so they've done this in both quarters then. That might explain some of their other numbers from the chart. Could we look at the chart again and see what the effect of their previous public, what do you call it, upsized public offering was in May? Because
So
they've already done this essentially.
in May, their cost of shares were in the area of $1.23 per share. And after that release of the public offerings by the beginning of June, it had gone down to 68 cents a share. So let's take a look and see if we can find that 8K from May. And it
Yeah,
looks like that was
on that
on
link.
the 22nd.
Okay.
And I'm finding all of this in Webull right now.
Okay. I don't have Webull still. I'll probably download it sometime this week.
And
In May 6th, let's see here.
yeah, that was for 20.5 million, or it was actually 20,725,000. But
the one in May was around May 20. It closed on May 22nd for $10 million public offering.
yep, and the announcement was on May 20th.
Mm-hmm. And so if I look at the graph for that, April, May 20th, Yeah, okay, that's right at their low point. So maybe they announced it internally first or something, because you see a giant drop from the 11th to the 20th.
And that's what's going to happen whenever you have those introductions of more shares, but for a younger company, that's not uncommon either.
And then it started upticking a little bit, but it's already dwindling again from that one. They're about to have another one here, so interesting. Hold on 1 second here.
Absolutely.
Sorry, I'm back.
Okay. So, this is what we're going to do. We're going to watch this.
Yeah, if it were me, even more novice than you, I wouldn't buy it just because I still don't feel like I know enough about it.
And that is definitely going to be the burden for any user. And I do encourage everyone who's taking a look at any of these particular stocks to do their due diligence, do their own research before making a decision. Make sure your decision is informed.
Well, that's the thing, I don't know what my due diligence is yet, so
Yep, and
that's why I like this channel here, because it's hopefully going to take me from novice level 0 to novice level 1.
Yep, and that's what we're going to explore this week. So this is going to be our target for the rest of the week, I think, is going to be this RA Medical. Let's watch this guy, and we're going to take a look at all the information that we can. We're going to get some research materials put together in the next 24 hours so that we have that ready to go tomorrow morning. And we're going to see if this is where we want to put a couple of dollars into. Right now, we are at a positive gain of 25 cents of our initial $20. So for anybody out there interested, definitely like, share, subscribe, and we will catch you guys again tomorrow morning, pre-market hours at 9 a.m., and we're going to go over these research materials and decide